Hi, welcome to the Market Alert for Monday, the 21st of June 2021. So the longest day of the year already. So let's go back to Friday. It was quadruple witching, and these were the headlines from Friday as well. 3 trillion reasons to brace for today's record-breaking quad witch chaos. Dealers may have a substantial amount of long delta hedges, i.e. long futures to unwind, which they did. And we saw the result of that. But this Pellic, Bullard, he was also out following on from Wednesday night when Powell talked about increasing interest rates, etc. Bullard spooks markets with taper talk, fears froth. There is some upside risk on the inflation forecast. You can't make this crap up, can you? Bullard bomb sparks quad witch chaos, yield curve collapse. So much for financial stability. It certainly did help with the market moving to the downside, but I did speak of this earlier on in the month about volatility picking up and things starting to unravel slightly. But of course, it all started on Wednesday night with Powell and his talk of increasing interest rates by 0.5% over the next 2.5 years. So this had an impact on the market. We saw the implied volatility increase from 1372 on Thursday to 1662, so starting to spike up nicely. We need to go to 26 on this to see any sort of end to the down move at the moment. And news to assist that this week, well, we've got the ECB today. Lagarde, the criminal herself, is out at 3:15. For the rest of the week, let's have a quick look. We've got Powell out tomorrow, so that's not going to help matters. Then on Wednesday, I'm just looking for the big guns. It's Flash Wednesday. All right. News, just the flash news for Wednesday morning there up until we've got the US obviously separate. So horrible morning on Wednesday because the flash news is only a half an hour apart or an hour. Crude oil later on that afternoon. But as we go further into the week, what else have we got on Thursday? I'm just looking for central bankers that will be speaking. We've got, this will be an interesting one. Let's have a look here. MPC purchase facility votes. That one will be interesting on Thursday. And we've got the rate as well, which looks like it's already forecasted to remain for rates to remain on hold. Although in the Evening Standard this weekend there was an article about the bank raising interest rates in the UK or having to counter inflation. What else have we got? Friday, not a lot there. So really it's today and tomorrow when we've got central bankers speaking. Let's have a look at the Dow, see what happened on Friday. I'll get the right chart. That's the DAX. So this has got to be the Dow. So let's just grab the daily chart. So we can see prices really accelerated on Friday, going straight through the 89% retracement in the daily chart and also taking out the low that we have to the left here. You can see there that was at the 89, which was already on the chart. So let's just delete these. We've also gone through this low here, so we have to go to the next low to the left. So from here, measured up to here, projected back down, will give us the next set of fib retracements. So from this low to this high, we're already through 38, we're already through 50. We can see there we just come through 62. So the next two downside targets for the Dow are going to be these two here, 32,733, 32,400, and also this low as well will be crucial should prices continue to move lower. There's a bit of support overnight at the moment, but how long it remains will be interesting, in particular that Powell is testifying tomorrow. So again, we can see the market coming back up to this high here, just over 89, double top, and then closing back below the 5-bar moving average, the 20-bar, going through all of the retracements we had off these 2 points, and now having to use this to draw in our downside targets for the Dow. Let's have a quick look at a bit more detail for Friday. Market sold off early. The quadruple witching was taken advantage of, and the market just never stopped. It was already down from the morning, is 100, 200, 300, 400 points before the market even opened. Traded sideways for a bit and then continued to move lower. Traded sideways up until we've got 8:30 at this time, and then as we went into the late evening before the market closed, you can see they just pummeled it to the downside once more. Overnight prices also down 100. This is 100. The other, let me just bring this back a bit so you can see. So overnight prices more or less 100 there, 200, 250 points down on the overnight already for the Dow, and struggling to move back to the upside there. So on the downside, draw in some, squeeze up the chart a bit, have a look, see where the downside targets are. You know where they are in the daily, so you can transfer those across. But that's what you've got on the downside, and the market's got to take out Friday's close and the 200 MA on the upside before it even gets to the DP level for the Dow. Looking at the bigger picture, you can see it there quite clearly in the 30-minute chart. From Friday, the market already down on the pajama market, and then down strongly in the session, found support, and then once the quadruple, which actually ended at 4:30 on the New York exchange, Eastern Standard Time there. So remember that for future. I thought it was the first hour of the session. Used to be, because they used to issue all of the times with the CME, the CBOT, when the options expirations were. But quadruple witching now is it ends when the session really ends on the day, which is why this advantage here of the market being pummeled again. And then you can see overnight prices down as well there. So have a look at the DAX, similar picture but still stronger than the Dow. We certainly read now, we went straight through the 78 and 89 that we drew from this low to this high. So we've got to switch over to here or here to actually work out where the market's now likely to move to the downside. So let's just start off with this one to here. So from there up to there, we can see we're through 38 and we're through 50. We found some support at 62 on the overnight there. So that's your picture on the longer term at the moment for the DAX. We took out the support to the left there, went straight through that on the overnight. So again, in the smaller time frames, have a look at a 5-minute, you can see the market was waiting really all morning for the quadruple witching, and then eventually again it went as the pajama traders came on board. That's the overnight Dow traders sending the market to the downside, and then continuing in the afternoon. The afternoon session is here, the market trading sideways but then eventually playing catch up on the downside. Overnight prices gapping down, coming back towards the close, but the DAX too is 100 points there, 150 points lower on the overnight, and still looking weak here as well. I'm just going to I'll stay with this at the moment. In fact, no, I'm going to switch to the 30-minute so you can see a lot more clearly the downside targets that we've got. So already below the S1, you've got the S2 there, and then the S3 will be just a bit further down if there's further weakness. Again, these will tie in with or more or less tie in with the fibs in the daily chart. So we got down here 15,005. Go back to the daily chart, 15,005. So we are down towards this low here, aren't we? Yeah, 14,960. So we know that if we're heading towards the S3 in the intraday there, that we're down towards the bottom end of the fibs that we have here. And then of course if you go back to the S2, which is, if I can see, 15,215, I think that says. Eyesight's not brilliant. 215, yeah, so it'll be between 62 and 78. So again, it just gives you an idea of where the market could trade to. And then in a bit more detail in the 2-minute, you can see on Friday, just bring this across, the market, is that, no, I don't think that was, is that Friday? Yes, it was the 18th, wasn't it? Getting confused. Don't know where the days go. Let's have a look here. Yeah, so the market coming down, tracing back, and then I say it was really just sideways until New York came on stream. And then in the afternoon, I had a couple of signals there to the downside, and the market then found support. And then, you know, again, it's this is a thing that we've found of late, is the market's doing its move, or making its move now, in the mid-morning, where you can see down 200 points, and yet in the first couple of hours of the morning, absolutely nothing, barely moved, compared to that mid-morning when the traders came on board in the US. So I'm going to have to look at this in a lot more detail and figure out where the time, or the optimum time, or the optimum profits can be made. Because even in the afternoon, you can see how the market just traded sideways. Used to be really good because the market would follow the Dow, and now it takes a long time for it to do so. So it's sort of disconnect going on there at the moment. And then finally, in the metals markets and the dollar, not looking good at the moment for silver. This is down on the overnight and heading down to where I had a potential buy signal, but I've cancelled that at the moment. Because, again, Basel III will be implemented a week today, I think, or Friday, 28th, whenever that is, so 7 days from now, so by Monday of next week. So we need, again, like the DAX and the Dow, we need to have a look at this. We've got this low here to this high, because we've taken out this support here. This has been done in the last 20 minutes. So let's draw in some fibs from this low up to the recent high, 78 at the moment. Crucial area for the market to stay above that 25.54. I'll have a look at that in more detail in a moment. Through 62, there's your 89. And the reason is the dollar won't stop going up on this news, even though, again, you can see that we've had 2 days of selling pressure. The market's still continuing to move. 78, 92, 59 is sort of the area, the blue line there, psychological level of 92.50. So until the dollar stops moving to the upside, silver and gold are highly unlikely to stop moving to the downside at this point. So a good shake out and clear out here. Let's have a look a bit closer to what's going on. There you go. You can see the shake out there now. So I'll have a look at this after I finish recording, see if I can get in at this levels, make sure there's some climatic volume action going on there. So have a look at the 5 minutes. Yeah, you can see the shakeout, and this is what you want to see in the silver market. You want to see, in particular, outside of the normal trading times as well, where you get this climatic volume. You know, it's Monday morning. Everybody thinks it's going to continue lower, and they can just switch it and bring it back. So again, the dollar moving to the upside. We'll stick with the daily chart on that. That's 78% retracement level for this. And then the gold market also under pressure overnight, but not as much as silver at the moment. Support for gold is at 1756, which comes back to this point here at the moment. I'm already through the 89 drawn from this low to this high projected down there. So let's see what happens today. Bankers talk, so anything can happen. And Lagarde, what time was she speaking? Let's just double check that. She's not out until 3:15 this afternoon, so a lot can happen in between. Okay, that will do it for this one. A lot of stuff in here, but needs to be got through. And we'll see what happens. So as ever, thanks for watching. See you in the next one.